Hi, good morning. Welcome to Nasdaq IR Insight Live. I'm your host, Will Briganti, and joining me today as my guest is Jeff LaRock. Jeff is a senior healthcare analyst here at Nasdaq IR Solutions. Jeff, welcome to the program.
Morning, Will.
Good to have you here and
Thank
good to have you back. So today we're going to talk about a couple topics. We're going to talk about the markets. We're going to talk a little bit about the Federal Reserve, and then we'll dig into your specialty, which is healthcare and biotech. Obviously, we're in the midst of earnings, so there's a lot of things to discuss there.
Definitely.
So let's kick it off with the markets. What are you seeing?
Sure. So the markets have been on a very good clip thus far in July. Best pace since January. Nasdaq opened today at an all-time high on the heels of Alphabet. Really great earnings, revenue through the roof. So a lot of momentum in earnings thus far. We're starting to see early signs that the corporate tax cut has kind of, might be benefiting the companies at this point. They're sitting on a lot of cash. It appears to be, benefiting their earnings thus far.
Okay.
So it's a really nice start to the earnings season. Past 2 weeks, I consider it the appetizer. This is really the meat and potatoes and the main course that we're going to get over the next 10 days, with over half the S&P 500 companies reporting over the next 10 days. So.
All right. Now, what's going on the more macroeconomic level with the Federal Reserve there beyond the markets?
So, the consensus out there that the Fed has been very transparent with their plan, when the hikes are going to be happening, and they never really want to catch the markets by surprise, because that's when you see some volatility kind of kick in. So we're anticipating 2 more in 2018, 3 in 2019, obviously beyond that, we'll see. But there starts to be this lingering concern: is unemployment as an all-time low? Are we getting overheated? Is the economy moving too fast at too much of a clip? That's what the Fed has to now deal with and kind of appreciate at this point, that, the economy here in the United States is really good, but, are we moving too fast, too quick? So.
Right, of course. Now, let's talk a little bit about healthcare and biotech. So obviously this is your sector specialty. You here and the team are obviously working with some of the largest and newest public companies in that sector. So as we get into the earnings season, what are you guys looking at? What should our viewers be paying attention to as well?
Sure. So I think that there's probably about 4 main drivers that are pushing sentiment, and the space in general has been on a really nice run. Biotech, since the early parts of April, on fire. So really nice move at this point. They're now outpacing all the major indices. So very nice start to the second quarter and over the past couple of months. But I really say that there's probably about 4 different things. Drug pricing. What's the plan with that? We have started to see some of the major pharma companies, initiate hikes. I mean, not hikes, excuse me, freezes and cuts to their drug prices. Do they want to stay on the good side of the president? Whatever. But at this point, the sell-side community doesn't believe that it's really going to, negatively affect the bottom line. So they've kind of maintained their estimates at this point. So that's always good. We're also seeing, M&A is moving at a really, really strong clip in 2018. We're seeing some big deals, and deals larger than $10 billion. Some of these larger cap companies, they're looking for high growth names, and they're finding them, and we're seeing M&A is a really big driver to this space. Also, IPOs, and that kind of goes in line with the M&A space. You look at these, attractive high growth names, and they're going public. Typically, it's tech that, in my opinion, is the leader in IPOs, but right now it's biotech. And right in 2018, they've now doubled the money raised in IPOs than what they did in 2017. So that's awesome. And we're not even
barely halfway through the year.
So
right?
it's a very, very good indicator. We're seeing some really nice companies go public. Private equity funded. They're the ones that are bringing these companies to the public, and seem to be very well received at this point. And and the last one is earnings. We had some big names report this morning. They're trading very well thus far, and they're also out there with great new products. The gene therapy space is it's new. They say it's in the early stages. We have a couple, maybe another decade or 2 of some really amazing products being brought to market. So it's going to be a nice time to be involved in the healthcare space.
Jeff, I appreciate that insight. My final question for you is just really any final takeaways for the IR community that are out there watching this program as it relates to kind of what you're looking at in the near term.
Sure. One of the most common, consistent commentary that we do get from the buy side is accessibility management.
Okay.
Making yourself available on the road, putting your management in front of the buy side community, explaining your story, talking about how great things are going. So accessibility to management is one of the biggest takeaways that we do hear from the buy side community.
All right, excellent. Well, we'll leave it there. Jeff, thank
Appreciate
you so much. Ladies and gentlemen, this was Jeff LaRock. He's a senior healthcare analyst here at Nasdaq IR Solutions. For more information about their team, be sure to visit our website. That's business.nasdaq.com. And thank you so much for tuning into this episode of Nasdaq IR Insight. We'll be back to you with another episode later this week. Thank you so much.